Good morning, everyone. Could I have your attention, please? If I could have your attention, we can make a start. Okay, thank you. Good morning. I'd like to welcome you all here today. My name is Alessandro Gennaro, and I am the director of the Department of Economics and Management at the Marconi University. I'm in charge of moderating this workshop, which is part of the trust meeting. This is Ilaria. I'm sure you know well. So I give the floor for the opening greetings and introducing the International Project Trust.
Hello, everybody. I'm quite glad, on behalf of the university, to host you during this workshop. The rationale of the workshop, together with the scientific reference, Professor Alessandro Gennaro, the workshop was aimed to give you an overview of our research challenges here in the Italian context, and to start with the debate, discussion, and mutual enrichment on this topic. Now we are in live and streaming. So I'm going to introduce our project to the audience outside from the university, and in order to give a background of the initiative of today. So first of all, I'm going to provide an overview of the most important features of Trust Project, the background, the main goals, the target group, and of course our powerful synergy here represented by the partners. The Trust Project, unfortunately, is still going to the end of the project. We have worked a lot. We have achieved the most important outcomes stated by the application form. And now we are in a crucial phase, which is the impact on the target group. So the presentation of our outcomes to the target group, to the audience, and see the effect and the benefits for them. What about the Trust Project? It has started on 15th January 2020, and it will be finished next January 2023. As concerns the structure of the consortium, we are universities from European and Asian context, in particular from Philippines and from Vietnam. And then we have very important representatives from the Fintech companies, business actors, in particular from Italy, from Milan, and from Philippines, from the Philippines Association of Fintech. What about the funding? Trust Project has been funded by the Erasmus Plus program, in particular Key Activity 2, Cooperation for Innovation and Change of Good Practices. And of course, it is the reference aimed at encourage cooperation between the Europe and partner countries, in this case, ASEAN target countries, and improve together the quality of higher education. And develop, as in this case in particular, to develop and design innovative and competitive curriculum, in particular for the postgraduate education. In this case, I can say that we are very lucky to have such representatives from Philippines and Vietnam, because was a mutual enrichment. So we, as Marconi coordinator, we have learned a lot from Vietnam universities, and from Philippines universities. So first of all, we really have to thank you, because we really demonstrated your professionalism and the high level of your research challenges. What about the partnership for the audience external to the event? We from Italy, as coordinator, Guglielmo Marconi University. We have from the United Kingdom, the Glasgow Caledonian University, University of Belgrade, engineering from a fintech company from Milan, and University of Cebu, San Luis University, Mapua University, and Fintech Philippines Association from Philippines. And then representatives from Vietnam, we have the University of Economic and Business of Vietnam, the National University, we have College of Economics, and we have Ho Chi Minh University from Vietnam. As you can see, it's a very effective synergy because it's a combination of academia and industry partners. So it was very important for us for this very good cooperation for the design of a very competitive and innovative master, for the development of the online lessons, and it was very, very good results thanks to the different actors, different organizations, different cultural perspectives. What about the core mission or missions of Trust Project? Of course, the most important mission was to improve the quality of higher education. But of course, in specific objectives, if we consider specific objectives, we have to point out two main goals. The first is the modernization of the existing masters in the target country, in this case, Vietnam and Philippines. And the second target goal was to deliver a new master, totally new, in fintech, finance and technology. Of course, the structure of our master was based on a blended format, blended methodology. We are facing, also in this case, I have to thank the partners because it was a very huge effort, the accreditation process, and they have made a very great job because it's a very long process, a lot of effort. But we have succeeded. So the accreditation, the new master has been accredited within this year in all the universities of Philippines and Vietnam. What about our target groups? Of course, we're going to have a short-term and long-term target group. Our audience, first of all, are students. Because they will be our first target, the first assessment, the impact assessment will be from this side. Of course, on the other side, we have also as a target group professors. Because professors were involved in the design of the online lessons, first of all. So they have received an academic training about the learning methodology, learning strategy, how to design an online lesson in order to be able to record, of course, with content, the competitive content, but on the other side also with a very good methodology, how to design an online lesson, so what would be the best approach to teach online, remotely, and so on. So professors, researchers, academic staff were all involved in this process, not just at the end of the project, but still since the beginning, since the research, because they have been involved in the administration of some surveys, and then basic for the research and analysis of needs. We were so precious for us to start designing the curriculum. And then they were precious support for the design of the learn lessons, the big core outcome of our project. And then, of course, they will be a precious support for the delivery of the master, because they will represent the intermediates between the platform, the new content, and the students. So they will be in charge how to adapt the new master or the modernized master into the former curricula, and try to transfer in the best way this new approach, new content, and also new design, since the masters have been designed by different universities and different countries. So if you have had the pleasure to go into the platform, you're going to see different lessons that have been designed by in a different approach, considering the different organizations. Of course, the other two important target groups are the Fintech Stakeholders, very important actors for the promotion of the master, for the design of the master, but they could be potentially also the target group, because our master in the long term could be a precious tool also for lifelong learning training path. So not just for students, but professionals that want to upgrade their skills and competencies in fintech. In a long-term view, of course, we have public bodies, because the long-term challenge will be to change the structure of the regulation of higher education in target country, but of course also in Europe, in order to accreditate the online distance learning in the same way and the recognition of the added value of this methodology, also in the country that at this stage currently are not so, the distance learning is not so widespread. So what about, I decided to focus on the master, because it is important for the audience to be acquainted of our main core goal. And of course, all the audience is invited to enroll to the platform, assess the content, and provide the feedback to us. What about the most important values of the master? We have absolutely a flexible modular structure, because we, of course, we have faced have a lot of difficulties to adapt a unique curriculum to different realities. We decide in this way to have some modules. We have different modules in order to give the opportunity to the university to adapt and embed the offer in the way that was possible for them. So the modular structure was a very effective strategy in order to cope with the differences and different formal restrictions in different realities. Of course, has been designed by different organizations, different type of organization. So it has the curriculum has an interdisciplinary approach. And that's quite so interesting and innovative, and try to be competitive. There's also a specific path given to the cross skills. It's quite important at this stage. Of course, the curriculum benefits from the international context, since the differences could cause some problems, but at the end are really mutual enrichment. And of course, as mentioned before, a win-win cooperation between university and fintech industry that's quite relevant and crucial in all the phases of the project and after the project end. What about our flexible modular structure? We have the contributes of our partnership. We have designed and developed foundation modules, core modules, and elective modules. Of course, in each university, in each country, will be a different way to deliver the master according to the accreditation procedures, program, and restrictions and requirements, of course. So there will be a practical part at the end, a workshop, an assignment, a master thesis, a practical session at the end. And the cooperation with the fintech industry will be useful in order to contribute to have the best skills for the students with an internship inside the companies. What about our structure? Of course, we're going to have a blended methodology. It depends on different realities. We could have from 30% to 60% of distance learning. Because of distance learning is a new approach. Of course, pandemic has caused, has had the effect of a different perspective, and has been recognized as a very powerful instrument, but it is as a very initial stage. So it is important now to change, of course, the accreditation in a long-term view. At the moment, of course, some universities has a restriction to have a maximum of 30% of distance learning, and the remaining part of the training path will be face-to-face. We have decided to design a Moodle platform and to tailor the platform according to our needs. And it will be this side. This is the view. I would like to invite you to go into the website, project website. This is a specific page for the platform. And you can also ask to be enrolled in platform and have an overview of the content. This is the homepage of the platform based on Moodle. Moodle has been designed by our technician, and of course different functionalities, and you have the structure of the modules. You have a session for the self-assessment, and a space, a specific virtual space for exchange of knowledge, for exchange of assignments, and interaction between the students, the professors, and among the students. Because at this moment, we have the opportunity to have students coming from different countries, and they could exchange knowledge in a wider overview. And this is, a detail of the platform. And then just a snapshot of the content. Of course, finance, technology, digital innovation, and entrepreneurship, international perspectives, cross skills that are quite requested by the labor market. What about my last slide is the summary of all the modules, and then inside the topics, the lessons. As you can see, all the flexible structure, the interdisciplinary program has been achieved in this curriculum. And the contributor of all the universities here have contributed to the really, really innovative and competitive master in fintech. So thank you very much and for participation and contribution to the partners.
Thank you, Ilaria. Now let's get down to business. The aim of today's workshop, as Ilaria recalled, is to discuss the challenges and opportunities of fintech by going over some critical insights from both academic and an industry perspective. We talk about it with Valerio Lemma, full professor of economic law at the Marconi University, with Gianfranco Vento, full professor of banking and finance at Marconi University, with Alberto Rastelli and Edoardo Busani of engineering, with Claudio Broggio and Francesco Reinini of SAS, with Davide Salviani of BKN 301, and with Joe Tapiador of Fintech Philippines Association. There are some changes in the order of speech we scheduled for today. So I have to postpone my introductory speech, and I leave this. I pass the floor to Professor Valerio Lemma for his presentation.
Thank you very much, Alessandro. Thank you both for inviting for the huge effort for our university. Just by way of introduction, I am happy to be here and to share with you a memory, because in 2015, Marconi University was called to lead, to guide, let's say, a group of international universities thinking about teaching and learning law in a global environment online. So at that time, there was the foundation of this cross-border activity that was developed due to new technology. Actually, since 2015, 7 years passed, our university is still online, is projected to the metaverse that now is coming, so an immersive new scenario. We're teaching, learning, but also we're doing business. So let's come to our intervention, because as a university, we did a lot of research in this field, and actually we presented last year a research project whose title was Regulating Technology-Driven Finance. So we were talking about subject and supervision in the digital area. This I want to share with you that we were dealing with fintech since a lot of years. As a way background, I wrote a book on fintech regulation that was published in 2020 by Palgrave Macmillan. So that's the background of all my studies. And these projects started when I was dealing in 2010, so 12 years ago, with the shadow banking system, so the non-banking financial intermediation. At that time, it was basically a form of market-based financing, and the computers were not so developed as they are today. Indeed, in 2016, I understand that all the major operators in such a field were moving faster and faster towards technology and high-tech, and they were moving from the old capital of the finance, so New York, London, to new capitals, Bucharest in Europe, so Eastern European countries, and to the ASEAN area region. So, according to this background, we developed a project, and we asked to the Italian ministry to finance it, because in Italy we have a very strong competition to get the national research project, and this year Marconi won this national competition. We were on top of other 3 universities, which were, let's say, a little bit elder than ours. So La Sapienza, which is the first public university in Rome and comes from the medieval time. We had the University of Perugia, which was another medieval university. And we lead also, let's say, let me check, the telematic version, the online version of La Sapienza. So less medieval, but still a public university. It's the first time that a private university won a research project for Italy. So this is an important achievement for us as a university, and we are very glad to share this achievement with you. So the topic was exactly the topic of this work, and our project is aiming at investigating the financial university in the European internal market as a target market. Because, as you are probably aware, we have a free movement of capital, and the new operational solution introduced by the latest technologies are able to project any job related to this circulation of capital outside of the physical territory of European Union. In this respect, our investigation focus on the proposal of a national plan for recovery and resilience, which we have in Italy, PNRR, made by the Italian government in January 21. This research is aiming at verifying the thesis that, and I think everyone in this room share, and if not, please raise your hand now or shut up forever. Our thesis is that the digitalization reduced the power of the state to, let's say, regulating technological-driven finance, as there is an increasing number of operators that may access directly to the market for capital without being a bank or any other supervised entity. In this respect, we have to go further in the path I mentioned you, which was started more than 10 years ago, where we start dealing with electronic money institution at that time, with remote marketing of insurance services, with the shadow banking system, as I told you before, big data, financial aggregators, and in the end, in financial regulation. As you are probably aware, we are dealing both with fintech, but also with regtech, so a way to regulate the way algorithms act, because as you are probably, I will not never say as you are probably aware, but I'm not used to talk to such qualified people. So this may look obvious for you, but for a lawyer or a regulator or a policymaker, it's quite new. The principal investigator, our principal reference is, let's say, the ESMA, which is the European Authority for Securities and Market. And as a background, we would like to improve anyone. So please feel free to contact directly me with your contribution if you want to be part of this project, in order to improve the public awareness in our scientific field towards digitalization. Now I am dealing with a huge problem because we have two very different approaches in the regulation in Europe. We have the Sandbox approach made by the financial authorities. So basically CONSOB, which is the Italian financial authorities, is saying work in a sandbox, so like in a kindergarten, do whatever you want, provided that this will not be a systemic risk. On the other hand, in the banking sector, we have another principle, which is same activity, same risk, same rules, same supervision. So it's exactly the opposite. If you want to do a fintech bank, you have to structure the same organization you have for a traditional bank in terms of risk capacity solving. And these are two very different approaches to the same topic. So take and get experience on new risk. Go and broke your hand in your leg in the kindergarten, or don't deal with savings. If you deal with savings, use all the traditional backstop and safeguards. That's the state of the art of our project. We are also dealing with fintech companies, fintech firms, and financial intermediaries in order to understand which is the new path. Actually, and I will close with a practical experience, we are dealing with the negotiation in the financial market of blockchain-based financial instruments. I mean that now you can ask for money and promise the repayment of such requirement. So this is a bond that is tokenized, so it's within a token. Actually, in Europe, you have to do the double accounting of these if they are based on blockchain. So you will have to issue the token based on blockchain, etc., etc., etc. But you have also to file the public authorities to get a registration in a center register held by the market manager, we call it, the market management company. So basically, we are waiting for new forthcoming regulation in Europe. We are dealing a lot with this, and we are studying how help companies to comply with the current regulation today and the forthcoming regulation. Because the center ledger and the distributor ledger are two different ways, have two different qualities, kind of qualities. So probably you need a center, that's my personal opinion, and the state of my research, of our research. You have a center repository for information. You need a central repository for information, but probably you don't need a central ledger for negotiation. So if you have a token that is able to circulate hand by hand, so out of a centralized scheme, but is also able to communicate by itself, by a self-executing mechanism, this transaction to a centralized information register, probably you can now join the current state of regulation, and so you can match the regulatory requirement. We will see what the regulator will tell for the future. Okay, so that's the state of the art. Feel free to contact us for any further need, any thing you can share, if you have questions, jobs, or if you want to share some of your achievements. Thank you very much.
Thank you, Valerio. Professor Lemma must lead the meeting for professional reasons. Okay.
Yes, I'm very sorry, and I'll see you later. Actually,
Are there questions?
Are there any questions? So but I know this program lasts, so we will meet.
Just one comment. The Philippine approach by the central bank is twofold. One is what we call test and learn approach, where the central bank allows innovators, be they banks or fintechs, to implement in a controlled way internally any project that impacts financial services. It's not a sandbox approach where there is an infrastructure involved. It is actually using the institution's capabilities to innovate on its own. However, the central bank is also open to a sandbox approach where there's an industry participants, there's a common infrastructure, APIs are ready, but in a controlled environment managed by either an industry association or by the central bank itself. That is what is being applied now for central bank digital currencies, which the BSP, the central bank in the Philippines, is experimenting on with selected pilot bank participants. So I guess the transition, it depends on the project. Central bank allows for that kind of individual corporate innovation, but before going to market, might go to a sandbox. And you're right. We have these regulations that are internationally recognized, particularly in risk management, and that there's a lot to overcome, but that does not mean that we discard those approaches as well.
Thank you very much. It's quite interesting because this means, according to my experience, a strong need for accountability of the central bank, because a central bank dealing with direct with the market about innovation is a central bank that takes its own responsibility on the, let's say, reliability of the innovation and so the resilience of the intermediary that is innovating. And actually, this is not the behavior of our national bank, which is very, very conservative on this and doesn't share this kind of management responsibility with intermediaries. But I wish that our governor will learn a lot from your approach, because investment bank, a central bank that takes responsibility, it's a good central bank for the people. Thank you very much.
Thank you. Thank you again, Valerio. Thank you, Joe. It's once again my turn.
Sorry. Just one word. Later is better than never. Just to introduce you, Alessandro, you have had the chance to meet him online. Professor Alessandro Gennaro, who is professor in corporate finance here at Marconi University, but overall he is also the head of the Department of Economics and Management here at Marconi, just to briefly, and will be speaker and also moderator of the today workshop. Just to briefly introduce you, Alessandro.
Thank you. Thank you, Susanna. Okay, let me begin just saying that it's a pleasure and an honor to be here today among the speakers of this international workshop. I had the responsibility for the introductory speech. I would be honest, when I thought about the title of my speech, and I decided to title Present and Future of Fintech, Some Issues to Reflect on, probably I did not realize how difficult and ambitious it was trying to offer a big picture of the main issues that characterize the present and the future of the fintech, identifying and framing in a perspective key the main issues on which to reflect today. To imagine the future evolutions of fintech is a very hard job, and by preparing this speech, I'm convinced that an accurate and up-to-date awareness of the domain of fintech is a challenge, is a big issue for both academics and professionals. Having said that, I thought I'd break my presentation speech in introductory speech into 4 points: perspectives in fintech analysis, fintech and financial system, fintech and economic growth, fintech and modern capitalism. For the last 3 points, I have tried to identify the main issues which academics and practitioners are questioning and are confronting on. Let's start with a brief recall of the main perspective from which we may analyze the fintech phenomenon. I focused on 3 perspectives: the financial perspective, technological, and economic one. From a financial perspective, fintech is about as you know, the introduction of new technologies in the financial sectors, and it is now revolutionizing the financial industry. Fintech has become a popular term related to the financial system and financial industry, which refers to new and continuously evolving technologies adopted by financial and also sometimes non-financial companies to better the offering of financial services to private, to firms, to institutions. But if you think about it, technology has always influenced the financial sectors and the manufacturing sector, technology has always influenced all the waves of industrial revolution by allowing advancement, able to change the way the industry players operate. So why is so special about the current fintech revolution? Certainly the pace at which new technologies are tested and introduced is faster than ever before. But more important, in my opinion, from an economic perspective, is that much of the change happened and is still happening from outside the financial sector, the financial industry. Young startups, firms, and big technology firms are attempting to disrupt the incumbent financial firms like banks, insurance companies, or other intermediaries, introducing new products and technologies and providing a significant new dose of competition. The financial perspective is preeminent in the academic debate, but is not the only one. If fintech, as the name suggests, is the fusion of finance and technology. As a technical term, financial technology or fintech covers a large scope of technical aspects, including data security, privacy, data analysis, hardware infrastructure, applications, management service model, just to name a few. Combining these three perspectives, I have identified some issues which I will present in the form of questions, which in my opinion are very interesting and challenging. Obviously, I make no claim to be exhaustive, and I will surely forgotten some salient aspects of the fintech, so I beg your pardon. The second item in my agenda is the impact of fintech on the financial system. So the first question I'd like to pose is, what are the implications of fintech for financial sector regulation? Valerio already said something about it, but I would say that not only sector operators are called to innovate, but also authorities and regulators themselves. Someone said fintech is fast become a global phenomenon, led by innovators and followed closely by academics, and just now is drawing the attention of regulators. In this direction, important steps forward were made that underline the importance of interaction and collaboration also between regulators and operators. Let me recall, as already Professor Lemma recalled, two Italian noteworthy initiatives launched in 2021 by Bank of Italy. The first one is the regulatory Sandbox, which is a controlled environment where supervised entities and fintech operators can test for a limited period of time technologically innovative products and services in the banking, financial, and insurance sector. The second initiative is the Fintech Hub, which is an area in the Milano Hub dedicated to startups that offer digital solutions to innovative financial, banking, insurance services by leveraging new technologies and new approaches. A second question would be, what effect will the growth in crypto assets and cryptocurrency trading volumes have on the stability of the financial system? As you know, the economic, accounting, and regulatory framework of crypto assets presents several issues on which international authorities and international regulators, including, for example, International Accounting Standard Boards or Basel Committee, are working. The crypto asset operates through an electronic protocol managed through a decentralized ledger technology, also called the blockchain. And about it, the financial literature has already highlighted that the prices of such assets, like Bitcoin, for example, is not only highly volatile, but with multiple criteria, with multiple equilibria even equal to zero. Their pricing can also be undeterminate, being a price not based on an economic equilibrium or on any trust in public authority. So having an intrinsically unstable price, therefore hardly predictable, cryptocurrencies are not very suitable for carry out the typical functions of money. It is also necessary to remember two negative externalities of crypto assets. They have often been used for criminal and illicit purposes. And second is that they are a source of high use of electricity necessary to validate transactions through the blockchain protocol. Other two questions relate, in my opinion, to the impact of fintech on business models and business strategies of financial industries, specifically in the banking sector. The question is, what will be the implication for banking and insurance business models? I'm sure Professor Vento will say more about this question, but I would like to say that the demand for financial services is constantly changing, especially after the lockdowns. Consumers and companies are increasingly aware of the potential of digital and seek for banks and insurance companies the same user experience of the products and services offered by technological and innovative operators. So banks and insurance companies must accelerate their digital transformation process, both directly through investment or indirectly through collaboration. This is a strong stimulus to competitions, also due to an increasing presence of not only innovative fintech and insurtech companies, but also of due to an increasing presence of consolidated big tech companies that operate originally in other sectors. The tech companies have the great ability to extract value from data, but banks and insurance companies still excel in the specialized skill needed to operate in a highly regulated sector. So a possible competitive scenario could be characterized by the collaboration between few digital operators, efficient traditional operators, bank and insurance companies, and large technological operators. So our last question in this field is, how will the banking industry evolve with fintech? In 2017, the European economy, that is an independent online journal sponsored by our national bank, UniCredit, titled an issue focused on the impact of fintech on banks, titled this issue, Fintech and Banking, Friends or Foes. I think that digital innovation and technology-based business model could provide new business opportunities for incumbents, for bank incumbents, by transforming how they create value and deliver products and service. Or they could disrupt the existing structure of the financial industry by blurring its boundaries and fostering strategic disintermediation. So by providing new gateways for entrepreneurship, fintech can ease the access to financial services, fostering competition by new players. And to survive, incumbent banks will have to react. Will have to react, facing rising competitive pressures, and have to adopt new strategies. Especially in the financial industry, fintech is considered one of the major investments for most competitive financial firms, and a dramatically expanded expectation of using fintech has caused a great challenge in its adoption and planning for banks and insurance companies. Let's move let's move on to the next item that covers the impact of fintech in economic growth, on the economic growth. In this field, our first question could be, does fintech produce economic advantages in other sectors other than the financial industry? The answer is not simple, but I think it would be useful to find it also to understand the transformations of modern capitalism. And with it, or with the transformation of modern capitalism, understand the transformation of modern society. The continuous growth of the investment in fintech firms has been powering by the development, has been powering the development of technological breakthroughs in multiple areas such as mobile network, big data, trust management, mobile embedded system, cloud computing, imaging process, DLT and blockchain, data analytic techniques, and so on. And these technologies are changing our lives in several aspects and are changing a lot of professional sectors. So a second question could be, does fintech produce positive externalities for society? A growing body of evidence in literature suggests that financial literacy is among the most important determinants of financial well-being. Informed financial decisions have been shown to be a key factor in making effective financial choices, and differences in financial knowledge acquired early in life explain a significant part of wealth inequality during retirement. So financial technology is revolutionizing the financial services industry at an unrivaled pace, from mobile payments, robot advising, and app-based investment platforms to online banking solution. Fintech has the potential to enhance the financial capability. Startups and platforms using technology to simplify financial processes are not only building the next generation of financial tools, but also encouraging and facilitating financial education and financial literacy. Improved financial and technological literacies, along with greater environmental awareness, enable people to better engage with artificial intelligence, personal finance, financial planning, and so on. And moreover, in the wake of the fintech era, visualizations and accessibility or user friendliness are important for financial inclusion, because the presentation format of financial information has been shown to affect choices made by individuals with low financial literacy. Of course, there are also some downsides. Fintech developments may indeed damage financial well-being by triggering impulsive consumer behavior when interacting with financial technology and platforms. A third question relates to sustainability. Will the new paradigm of sustainable business in sustainable society be a bottleneck or a booster for fintech? This is a crucial question, in my opinion. With this regard, let me say something just focusing on the European Union. The resources activated by the Next Generation EU plan represent a unique opportunity for the European Union to accelerate the digital transformation of the entire economic system of a continent that has long needed to combine different culture and tradition with innovation and sustainability. For Italy, the opportunity is even more relevant, being the resources available today useful to face a situation of public budget which does not have margin of flexibility due to the huge increase in public debt after the COVID pandemic. So on the one hand, we have that the digitization of the country is a top priority in our national plan for resilience and recovery. And the financial sector could be one of the main triggers to implement it with effect that would benefit of our national socio-economic system. On the other hand, the significant growth in the volume of investments in sustainable profiles demonstrates that the decision to allocate resources and portfolios in sustainable finance is also worthwhile in economic terms. So these two trends could represent, in my opinion, great growth potential for fintech companies, mainly for fintech companies capable of offering innovative solutions on two fronts. Skills in credit risk assessment and skills in greenwashing risk detection. Now we come to the evolution of capitalism. In this context, it is interesting to investigate the boost given by fintech to the transformation of organizational model and financing policies of firms. First, I ask myself, does fintech innovation promote enterprise transformation? Fintech has become a trigger to enable several driven forces of business transformation in several sectors: agriculture, manufacturing, services, commercial trading. And these driven forces are technical development, business and product innovation, cost saving, customer profiling, just to make some example. Therefore, my answer to my question is yes, I believe that fintech facilitates and accelerates business transformation. Second, I ask myself if and how fintech services affect the SME's debt. Let me answer this question just considering the Italian case. The role played by small and medium enterprises in Europe, in the European Union, is important, but the role played by companies of such within the Italian economy is much more important than the European Union average. Italian SMEs have historically been characterized by high bank debt, low net worth, and using personal guarantees toward banks. After the great financial crisis, after the change in national and international economics, after the increase in market competitiveness and geopolitical instability, all these factors have brought Italian SMEs to start questioning their financing model and to start a deleveraging process along with a debanking process. Therefore, the financing structure of Italian small and medium enterprises is changing compared to the past. Overall, small and medium enterprises level of capitalization in 2018 was much higher than in 2007. It is therefore clear that small and medium enterprises are seeking a greater balance on their financial sources compared to the pre-crisis values, where the use of debt was the main sources of financing. In this framework of disintermediation of bank credit, we are witnessing the emergence of forms of alternative finance and, let me say, legal shadow banking. The report conducted by the School of Management of the Polytechnic of Milan classifies 6 categories of alternative financing sources: mini bond, crowdfunding, invoice trading, direct lending, initial coin offering, and crypto assets, and private equity and venture capital. Some of them are clearly fintech products or fintech services and are based on technologies and platform development in fintech field. For example, crowdfunding offers the opportunity to raise capital on internet portals from retail entities in different accepted form: reward crowdfunding, lending crowdfunding, equity crowdfunding. Invoice trading allows this investment of commercial invoices by non-banks through web platforms. Initial coin offering consists of the placement of digital token and crypto assets in general on the internet thanks to blockchain technology. These new technology-based types of financing do not represent mass funding in Italy, but we are experiencing a period of great growth and notoriety. A final aspect to consider is the link between fintech, entrepreneurship, and private capital. In this regard, I wonder if fintech will continue to offer opportunities to create and finance new businesses. As you will remember, the scope of activity in fintech started with mobile payments and money transfers. Then it included peer-to-peer loans and crowdfunding, and then it has spread to the new world of blockchain, cryptocurrencies, and robo-investing. Startup firms with new technology are today racing to fill the holes in the customer's experience left by traditional firms on all these dimensions. Several studies confirms that fintech's gaining momentum. Let me say some sample figures about fintech growth. Following the report Fintech Waves conducted by Ernst & Young, by EY, if we look at the number of fintech startups in Italy, we will discover that there were 16 startups in 2011, 199 in 2015, and a total of 345 in 2019. Another report, the report of Fintech and InsurTech, released in December 2021 by the Osservatorio Fintech and InsurTech of the Polytechnic of Milan, says that at the end of 2021, in Italy there were 564 innovative fintech and insurtech companies, composed by 53% of startups, 24% of innovative young small and medium enterprises, 21% of scale-ups, and just the remaining 2% of corporations. This young and innovative reality demonstrates, in my opinion, the ability to collect interest and finance. These 564 innovative fintechs detected in 2021 demonstrate the ability to collect a total of 2 billion euros of funding. The figure is significant, but the access to growth capital is still limited, as evidenced by the fact that over 50% of the realties did not raise any capital. But in my opinion, these few figures confirm that the fintech ecosystem is constantly growing and still offers significant opportunities for young entrepreneurs to start successful business. Last question. What is the level of interest for private capital for the finance sector? Once again, considering a pre-COVID era, we can read in the aforementioned EY's report, Fintech Waves 2020, that the fintech sector has been largely financed. Global investment in fintech firm from 2016 to 2019 totally reached $110 billion US dollars. In the USA, there have been 43 unicorns. In Europe, 14 unicorns. In Asia, 15 unicorns. In the rest of the world, just 5. The fintech industry received most of the investment from venture capitalists across Europe over the period 2016-2019, collecting 20% of the capital invested in this region, in the European region. Trends show that investors' interest on early-stage startups shifted towards mid-stage and late-stage companies, but also investments in the Italian fintech investment still lag behind other European and global environments, that gap started to narrow in recent years. Funding to Italian fintech startups grew at a compound average growth rate of over 60% from 2016 to 2019. Other relevant evidence is that ESG, impact innovation, and digitization represents three important drivers for venture capital investments. If this driver will remain in the coming years, certainly fintech will be a sector that will attract a lot of investors' attention. I think I've covered all the items on my agenda, and thank you for listening. Thank you all for your attention.
Thank you very much, Professor Gennaro. We are so proud to have such academic perspective in our university. There's much more than we would like to share, so thank you very much. I would like to ask to the audience if you have any question, exploit this chance. Do you want to make any questions? Or do you want to present your situation, some differences? Be free to ask or to speak. It's okay? Okay.
Okay, Professor Bento joined us on Zoom. Hello, Gianfranco, nice to meet you.
Hello, nice to see you.
Just a moment.
Sorry, just 1 second.
To set the presentation.
I have to manage Zoom. Just.
Can you see my presentation?
Yes. No. No.
Not so far.
But we can hear you. This is just.
Okay. Gianfranco, do you want to try to share the slides? Otherwise, you can send to us and we're going to share for you. Okay.
You can share
I'll send to you, but yeah, I can share it again.
Yeah, it's better. Thanks.
Here we are.
Just, Franco, please briefly introduce yourself, just a few words.
Yes. Yeah, my name is Gianfranco Vento. I'm professor of banking and finance at Guglielmo Marconi University. And I used to teach at Regents University in the past. And I'm here today to deliver a presentation about fintech versus traditional banks, regulatory challenges, and business perspectives. By the way, I'm involved in trust projects since the beginning, so I'm very happy that to share with you some ideas about how fintech is affecting traditional banking industry and what regulators should take into consideration in designing a proper regulatory framework in order to balance the stability of the system on one hand and the innovation on the other hand. So in this presentation, I'm going to talk about the banking industry and fintech, how fintech is impacting on traditional banks, especially on commercial banking. I will discuss briefly about which are the most relevant financial innovations introduced by fintech, and then what are the possible scenarios, the future of financial system. And last, I will focus my attention on some macroprudential issues that should, as I said, should be taken into consideration by regulatory authorities and supervisory authorities in order to make the financial system safer, but at the same time to stimulate innovation. So I try to first of all to point out what are the most relevant areas where fintech is affecting traditional banks. We are aware that the banking system is facing crucial structural changes and challenges that are going to shape the future and the ability to serve financial needs of real economy. What are the most relevant players affected by fintech? Well, we have government bodies, central banks, regulatory authorities. Obviously, they all are trying to figure out how fintech is affecting their work. Traditional financial services firms, banks, insurance companies, other kind of financial firms are also affected by technology. But also tech companies which provide financial services alongside their core products are also interested by fintech. And also companies that provide technology for financial transactions, mobile networks and so on. And finally, we have new and disruptive companies that are also a part of this picture. We also know that the global fintech market is expecting to grow fast. In 2021, it used to be $115 billion, the overall market size, and it is supposed to reach roughly $1 trillion in 2030. So the growth rate of a global fintech market is supposed to be relatively high compared to the growth of traditional banking industry. And obviously, how fintech is affecting financial innovation? Well, financial innovations and the accompanying disruption could create or could add to different financial and non-financial sector risks. Obviously, financial innovation can generate new risk. This is something which is not fully new. It always happened. The point is how to identify those risks, how to manage those risks, and what authorities are supposed to do. So while financial innovation poses regulatory challenges and may create new sources of systemic risk, it is important to point out that the technology introduced financial innovation has the potential to result in cheaper and more convenient services, more efficient, less costly delivery, and more competition and more constantability in the financial system. So the innovation, we all are aware that the innovation can create a number of advantages for clients, for financial intermediaries, can reduce cost, can generate more competition, and can produce more convenient services. So we all are aware about the advantages of financial innovations. And also, financial innovation has been supported by specific technological advances involving smartphone technology, the internet and application programming interfaces. Artificial intelligence was a big driver in financial innovation and also big data technology. And also the DLT, the distributed ledger technology, are the most relevant drivers in modern financial innovation. Just to mention some examples, smartphones, internet application programming interfaces allow to have quicker information exchange. They make possible to have new delivery channels and better exploitation of economies of scale. On the other hand, artificial intelligence and big data technology make possible to have a use of artificial intelligence for credit scoring processes, big data applications to financial risk measurement and management, and also artificial intelligence and big data make possible to have application to insurance investment advice. And last, distributed ledger technology keep and share, allow to keep and share records in a synchronized way, and make possible to have smart contracts based on decentralized consensus and hacking-proof algorithmic execution. And last, make possible to have interesting venues for payment systems. So these are probably the best known advantages related to financial innovation nowadays. Well, in this framework, the European Banking Authority has classified the fintech firms in 4 clusters. We have, on one hand, we have credit, deposit, and capital raising services. Then we have a second family, which is represented by payments, clearing, and settlement services. Then we have a third family represented by investment services, investment management services. And the last one is represented by other financial related activities. So payment and lending activities are segmented that have attracted the largest number of firms. So in the big picture, in the framework of financial innovation and fintech, the areas that are where there are more intermediaries, more companies competing and entering fintech market is represented by payment facilities as well as lending activities. Well, how all this innovation is affecting traditional banks, especially commercial banks. Commercial banks face competitive threats across the different financial services they provide. The competition is increasing in payment services because by offering more convenient payment solutions, fintech firms can undermine an important revenue source for banks. And this reduces banks' access to critical payment data. But also in lending business, the competition is increasing because the capacity of big tech companies to tap into a vast amount of personal data and turn soft into hard information undermines the information franchise value of banks. And the third area where fintech is competing very hard with traditional banks is represented by asset management, wealth management, because access to wealth of data on individuals allows new players to provide quicker and more tailored advisory services for clients. Here in this graph, we have a summary of responses by European banks to the question, how do you see fintech affecting the current business model of your bank? So in different areas of banking industry, retail banking, payment and settlement, asset management, agency services, and so on, we have the perception of European banks. The perception is changes according to the segment of the industry, but some banks believe that there are opportunities to increase revenues, but I think, especially in some areas, the majority of banks believes that there are threats to decrease revenues, especially this in retail banking, in payments, and so on. So I think more banks are more and more conscious, more and more aware about risks related to coming from the competition of fintech intermediaries. So what are the possible scenarios for banking industry? Well, traditional banks continue their dominance. They will renew itself by incorporating new providers and new products. Fintech solutions will become part of the banking system. So the fintech and traditional banks are going to be more and more integrated in the future. And also financial risk will continue to be concentrated in banking system, as well as in non-banking financial institution linked to the banking system. However, An increasing number of non-financial risk will be located in a small number of IT providers, which can result in new sources of risk. IT risk, risk related to these new technologies are becoming more and more important. They used to be classified in the past in the broad area of operational risk, but nowadays the level of awareness about those risks has necessarily to increase. In this framework, also regulatory responses are important because they have to focus on interlinkages and cooperation between banks on one side and fintech and big tech companies on the other side. So traditional banks retrench, structural change in financial system, traditional banks retrench in fintech, and big tech companies play a greater role. Financial risk will be distributed over a more diverse set of players, and the issue of firewalls between financial and non-financial parts and of big tech and similar companies will become important. On the other hand, non-financial risk related to IT will assume an even more important role, will be concentrated, and concentrated provision of such services could create additional interlinkages between banks and non-bank providers, which otherwise have no connection. And also, the changing financial structure will require a rethinking of supervisory practices, data collection, and micro and macro-prudential tools. So fintech represents a big challenge for regulators and supervisors. So in this scenario, regulation of fintech and big tech will be the key issue, as well as access by new players to lender or last resort facilities and coverage by deposit insurance. So it is important that in a way to level the playing field and to allow also to those intermediaries to have somehow access to lender or last resort facilities and also to deposit insurance. So to conclude, what are the macro-prudential issues authorities have to face? Well, first of all, the increased digitalization in financial services should call for a change in regulatory and supervisory practices. I have just said this. The current approach to prudential regulation of banks is nowadays focused mainly on financial risks, but digitalization may bring increased importance of non-financial risk, which nowadays are classified under operational risk. Expansion of digital activities in the financial sector should require more accurate reflection on non-financial risk in the prudential framework. And this would also apply to the skills of staff working in regulatory and supervisory authorities. Probably the skill of staffs of authorities, they have to change or at least to be integrated. An issue for regulators is the definition, the possible expansion or adaptation of regulatory perimeters and the conditions for accessing the safety net. This is another important area. So access to the safety net, including the market maker of last resort facilities, must go hand in hand with the development of prudential regulatory framework for fintechs and big techs, especially in the scenario of bank retrenchment. And particular attention should be paid to customer protection and anti-money laundering, which are two areas where fintech and big techs may not spend as many resources and where controls are lower compared to traditional commercial banks. So probably the fintech industry should invest more in consumer protection and AML, and regulators should push in this direction. So enhance global cooperation on regulation of financial activities of fintech and big tech, as well as access of these companies to the safety net is more and more important. It's also important the possibility of a ring-fencing of the financial intermediation activities developed by big techs, as this may be forced to be provided through a subsidiary that will fall within the regulatory perimeter. It may leave room for regulatory arbitrage or opportunistic behavior. So this is something should be avoided, should be prevented. A third area for policy action will cover non-financial providers of services, which may be under different regulatory authority. So, for instance, a telecom regulator should also regulate some segment of these new businesses. And finally, the support framework for an orderly exit and capacity reduction of traditional banks should be strengthened. Under any of the scenarios discussed, traditional banks will face increased competition and even tighter profit margins. So this will necessarily result in traditional banks reducing capacity and possibly exiting the market, and the process that can cause fragility. So supervisory and resolution authorities must be well prepared for the process, but this process can also be proactively supported. And this includes also avoiding government support for unviable banks, but also facilitating mergers, including cross-border mergers, and easy barriers to market exit and liquidation. Thank you very much for your attention. And do you have a question?
Thank you, Gianfranco. The presentation of Professor Vento touched on many points of interest, describing some directions of the financial innovations and the organizational model evolution in banking sector. There are any questions? Just a comment from, okay.
Yeah, I guess for the information of Professor Vento, your analysis is actually being implemented in the Philippines already. In 2018, 2019, the central bank in the Philippines has established its payment systems oversight unit, which oversees the payments industry. Also, it has established the Technology Risk and Information Systems Department that oversees implementation of technology solutions and practices in regulated financial institutions. So the central bank is proactive in that sense, at least in the Philippines. Second is the digital banking licenses have already been issued, and it's being restricted to at least the first 6 digital banks, and that was 2021. This year, I took note of your possible exit entry of whatever traditional banks. The central bank has also encouraged the mergers, acquisitions, or exiting from the banking industry of regulated institutions, particularly community banks that are subscale. So in some sense, what you are saying is already being done in the Philippines, and we are looking forward to what will happen as a result of these regulatory actions in the next couple of years. Now, for the fintech industry, it opens up opportunities. First is collaboration with traditional banks so that their products are being used by the traditional banks, because it is tough for fintechs to enter into financial services directly. The central bank has already laid out rules, for example, on electronic money issuance, and also on payment systems operations. So I guess what I'm saying here is, if you want to look for a live case from which to examine, practice, Philippines is that laboratory. Thank you.
Thank you.
Thanks to you. If I can reply, Chairman.
Yeah.
I'm aware that Philippines was very proactive in promoting fintech and in trying to facilitate as much as possible interaction between fintech intermediaries and traditional banks. I think Philippines started investing in an alternative distribution channel for payments a long time ago, well before fintech was defined. So I would say Philippine Central Bank and Philippine financial system as a whole was one of the most proactive, one of the pioneer in this industry. I have to say that, for instance, in Western economies, including in some continental European countries, probably central banks, regulatory authorities was not as proactive as the Central Bank of Philippines. So I think that this macroprudential recommendation I commented before could fit for a large variety of authorities and players worldwide. So, but I'm happy to know from you that that Philippines is going this direction and is doing well.
Thank you, Jov. Thank you, Gianfranco, for your interaction. Other question, a comment.
Hello, thank you. I just wanted to comment on, I think it's both what Gianfranco and Jove were talking about between traditional financial institution and startups, different interactions. From the perspective of us preparing the student for this, I think it's very important to think how will they broker these sometimes tensions. We talk about it a bit in our module, entrepreneurship and entrepreneurship. Are we preparing the students for the skills to deal with this bank is conservative or is not conservative? Is it bank that has fintech within it that some banks are starting to do, like in entrepreneurship, or trying to work with another sector because it's a particular skill to manage that? Our students will have to deal with this situation, Philippines and Italy. So we just have to think about it. It's not really a question, comment. In the master, are we preparing them for that? How do they broker? And this goes beyond just finance skills. It's also lobbying. It's also how to change power dynamics that we need to prepare the students because they'll have be the ones who have to impact what is happening. Whether they are conservative or not, our future students will possibly improve the situation. So just for everyone to think how we are responding to the current situation by preparing our students for it. We had some sessions in our module on it, but I just think it's interesting because it goes beyond the traditional skills of finance and technology. It's change management, it's all the other things that we do to create change.
Is the question for me?
It was
It's
just a comment,
but
yeah.
if you want to reply.
No, I mean, I think the education industry, universities, they play a crucial role in this because, of course, as long as financial innovation is creating new kind of financial intermediaries, new kind of ways for delivering financial products and services, and new kind of analysis for taking financial decisions, of course, universities should be ready to train properly students and to incorporate skills in the programs in order to have graduated students and master students as much as possible ready to enter in this new financial system and be active immediately. So I think it is a big challenge also for academia and for your universities. Sure.
We have another question or comment.
Thank you. I'm Thủy from VNU, Hanoi. We just to sharing the experience in Vietnam because we do not have the Sandbox initiative in Vietnam now. And up to now, we are confused about many things from the cryptos, from the token and the other cryptocurrency. For example, the money laundering and any other issues. And in our government, so we are confusing about who is in charge of the issuing the regulations. Some of this, we have the idea is the Ministry of Finance will issue all the regulations about the the fintech and the other related. But some want the state banks have to be in charge of issuing the regulations. And what your opinion, who need to be in charge at the top level of the government bodies to issue the regulation, and your experience in your countries, because we are in the developing countries and we have many things to deal with. Thank you.
Gianfranco.
Thank you very much. It was very interesting to see a different situation around the country. I think that at the end we will go in the same the direction, but of course the infrastructure, the background is very different from a country to another. So it's quite. Yeah, we have a comment for the comments.
Now, just to share the confusion in Vietnam, because they're still trying, your government is still trying to figure out who really leads this kind of sector, right? In the Philippines, that has been resolved. What the government has done is to have, for example, the BSP, the Central Bank of the Philippines, take charge of all of these payment financial transactions. So a law was passed where the National Retail Payment System specifies the Philippine Central Bank as the regulatory authority. As a result, all the other regulatory bodies, Securities and Exchange Commission, Insurance Commission, are following the BSP line. And that has been made clear. And I think that should be clear as well. So I guess one is to establish a law. Number two is to determine who is the ultimate financial authority, in this case, our Philippine Central Bank, and all the other regulatory agencies to fall under. Now, with regards to crypto assets, that's different because it is an asset. Sometimes it is an asset that can be used for investment. The SEC has authority. So that's a different story. But at least for payments, especially for transactions involving the financial system, is the Philippine Central Bank, in our experience. And in the ASEAN framework, I think that's been being studied by the various central banks, Vietnam, Indonesia, Malaysia, Philippines. And to test that case, Singapore Monetary Authority and the Philippines are also working towards cross-border transactions, starting with payments. So I guess that's our share. That's what we're doing.
Thank you so much.
Thank you all for listening, for your comments, for your questions. I think we deserve a short half-hour break for coffee. Thank you.
Yes. Okay. Yeah. Okay. We have to cope with some delay of the event. So if you agree, we're going to have 20 minutes of break. So you are free. I have a coffee outside, and we're going to come back at 11:40. Is it okay? Okay. Thank you so much.
Can we start? I hope that all other will come soon. In the meantime, I think we can start. Ci sentite da Zoom?
Sì, noi sentiamo benissimo, voi sentite
Perfetto.
noi?
Grazie.
Ci sentite?
Ah, giusto. Ma basta che la chiudi.
Non ci sentono.
No, mi sa di no.
Io sento.
Sì,
Ah,
vi
perfetto.
sentiamo,
Eh
vi
sì.
sentiamo. Adesso stiamo condividendo lo schermo
In
di
sala?
Zoom.
Forse no.
Mi sentite?
Sì, noi
Ok.
sentiamo molto bene.
Perfetto.
Ci vedete?
Sì, adesso sì, stiamo condividendo lo schermo di Zoom, così controlliamo se potete condividere, se avete una presentazione, dovreste...
Fantastico.
Vediamo. Chiudi la chat. La X in alto, quindi chi
No, quella chiudi tutto.
allora il segno di spunta la virgoletta. Guarda, c'è una virgoletta e la chiudi. Potete provare a condividere intanto la
Sì.
presentazione.
Sì.
Vogliamo togliere l'audio del nostro... Non so, quello deve essere aperto o chiuso?
Vedete la mia presentazione?
Sì, perfettamente. Ok, tanto. Così di che partiamo con lo streaming.
Io la vedo.
We can start also the streaming session. Thank you.
Okay. Could I have your attention, please? Okay. I think we can make a start. We can begin the second part of our workshop with a presentation from Francesco Renini and Claudio Broggio, that are digital accelerator leading
Non sentono neanche più
leaders
niente, ma si sentono i loro
in
rumori
SaaS.
adesso. Da quando è condiviso non credo che c'entri molto.
Francesco, Claudio, stage is yours. I don't know. Francesco will begin. Sorry, I was in mute. We were in mute. And Francesco and Claudio, the stage is yours.
Oh,
Thank
thank
you.
you very much. Can you hear me?
Yeah?
Okay, fantastic. Thank you very much to everyone, and thank you very much for having invited us to this meeting. We are going to talk about some very important topics talking about artificial intelligence, and specifically we will talk about in the next 30 minutes about ethic, trust, and sustainability. Please don't hesitate to interrupt us whenever something is not clear or whenever you have some question and so on. I cannot see currently the chat, so I kindly ask any colleagues to interrupt me if any question will arise from the attendee. So in the first part, the next 15 minutes, we'll talk about two very important topics that we have to consider when undertaking artificial intelligence interaction with human beings. So, for example, in projects, in services, and so on. And very important topics are ethic and trust. Okay. What do we exactly mean when we talk about the trust in artificial intelligence? Right now, we are observing a sort of quantum revolution. In this case, sorry, okay. The quantum revolution mentioned here is not intended about quantum computing. Okay, this is a different thing. quantum revolution in our vision is referring to a phenomenon by which we are observing a sort of quantum revolution in computer science usage. So computer in the past gained human trust by performing exact calculation. So currently no one is going to discuss the precision of computer in performing calculation. But with the introduction of artificial intelligence, computers are called to perform probabilistic estimation. So in other words, they are getting them to be, we are getting them to be more and more similar to human brain. And in this process, we are shifting their job, or better, we are complementing their job by asking them performing probabilistic calculation and adding the probabilistic vision to the deterministic one. Okay. So this means that they need to gain once more human trust starting from scratch. So whenever a computer suggests a decision to a human, whenever a computer shows, for example, a forecast of the future to a human, and so on, the computer needs to gain the human trust. It's not immediate right now that the human will trust into the computer suggestion or the computer decision. Okay. And this allowed me to introduce a new concept, that is the explainability of the artificial intelligence to explain why the artificial intelligence made such a decision or proposed such a suggestion to a human, and how we should trust into the artificial intelligence. This is a concept very interesting and is a scientific concept, because science is telling us that the more an algorithm is accurate in forecasting the future, for example, forecasting the probability of something will happen. So the more the algorithm is accurate, the less is explainable to us. And this is quite similar to the function of the human brains, because, for example, if I ask you, if I show you the image of a dog, for example, you can see the image and immediately answer, yes, this is a dog. But if I ask you why you are telling that this is a dog, you have to think, and it's not so easy to explain why you are telling that this is a dog and not a cat, for example. Because the process of recognize and imaging as a dog and not a cat is involving something that is called deep learning. And the deep learning is not so explainable, such as a more simple algorithm. Okay, so it's more to explain for a human. For example, why are you stopping to the traffic light? And the answer is because it's red. And why are you going? Because it's green. So a very simple algorithm is more explainable than a very, very complex one. This is the reason why sometimes, if you are involved in ethics, it's not so easy to decide if you want to adopt an accurate algorithm that is not explainable, rather than one that is less accurate but more explainable. And for example, we'll see later, just a bit later, that in financial and fintech space, sometimes this balance has to be evaluated with very, very high critical accuracy. Okay, so what about the trust and the ethic involved into the AI? We have to consider that AI is something similar to the human brain that must be trained, okay, with data, with the proper algorithm, and is called to show us an outcome that can be trustable, ethical, or not. So let's talk about bias. What is a bias? Bias is a sort of error or something that is unwanted in the decision process. So talking about AI, this is the schema about the decision process. We have to collect the data used to train the artificial intelligence, and the artificial intelligence, by performing any computational work, will show us an output that can be a decision or a suggestion, an optimization, and so on. So bias can be found in data, because, for example, we can provide to the artificial intelligence data that are not well sampled or not balanced in terms of the representation of the population, or are not good for perform something that we believe is ethical. Okay, and at the same time, bias might be found into the artificial intelligence itself, depending upon the algorithm that is used to treat the data, to compute the data in order to generate the desired outcome. Of course, if we have bias if we have bias in the training data, or we have bias into the chosen algorithm, we will have bias into our output. Okay. Let's go to see some quick example. So if you go to Google and you write manager, this is the outcome you will find. Okay, manager is a man, typically for Google, white skin. And this is not a Google algorithm problem. I think that the problem in this case resides to the tag that Google can find to into images. So if Google is trained with the images where manager is tagged on men with white skin, of course, the artificial intelligence will learn that this is the typical profile of a manager. At the same way, if you type nurse, you will find typically women, okay? And you will and if you type teacher, you can find typically women, except a man. But if you observe the women and the men, there is a slightly different. Women are usually associated to a low-level school, for example, for children, and the man is associated to a higher level school, for example, for university. You can see behind of the man the complex formulas written on the wall. Okay. If you write beautiful person, the bias lead to the outcome more or less only for women. Okay, and if you type championship person, the biased outcome will lead you to a man. Also, not only for photos, only for draws, and you can see typically a man tagged as a championship person. So this is a funny case of bias. You can find very, very easily on the network, but sometimes you can find not so funny cases of bias in artificial intelligence. For example, you can see here two cases. The left one is about the estimation of probability of recidivism in having more crimes in people, and the artificial intelligence estimated that Black people have more probability to be recidive in crime. And this is, of course, a bias that is not ethical. Probably because we provided to artificial intelligence, they provided to artificial intelligence data that is not useful to detect the probability of recidivism. For example, the color of the skin. And in the right part, you can find a bias in artificial intelligence by evaluating curricula by Amazon to hire person, to hire people in the force, in their workforce, and the artificial intelligence, after having been trained with the past data, decided that the more useful candidate were men against women. And this is due to the fact that in the past, men applied a lot of curricula and women few, very, very few. So the artificial intelligence thought that men are more suitable for Amazon than women. And this is another example of bias. In the specific case, talking about fintech, for example, imagine the application loan and the grant for the application loan. So this is the typical case where the usage of artificial intelligence can be ethical or not. So please be more, pay a lot of attention by using sophisticated algorithms in order to be explainable. For example, why a financial institution is granting or not the application of a loan, a mortgage, and so on. Okay. Talking about trust, we have to trust in artificial intelligence to create value from artificial intelligence. Because if I use, for example, a self-driving car, I think that the upper part of a self-driving car is the more suitable situation, because I can spend my time by doing something else and not be aware to control what artificial intelligence is doing, the lower part. In the lower part, I think there is no value about the usage of a self-driving car. I prefer driving rather than control constantly what the driving car is doing. So, the last thing I want to say to you is that the collaboration of artificial intelligence and human intelligence is very synergic. And this is an example where the usage of a chatbot is being used for the first level of the customer care, for example, where the humans are usually called to perform boring activities and not so high value added activities. So in that case, the first level, the front line, is performed by a chatbot, and the second level, where humans can express their value in more and more complex resolution of problem, can be in the second line and create more value by using their knowledge and their human ability. Okay, if you have no question about the ethic and trust, I kindly ask Claudio to move on to the sustainability part.
Okay, thank you. Can you stop the sharing of your monitor so that
Sure.
I can share mine?
Yeah.
Okay. I also share the sound. I hope it will be shared, because I will have to send also a video, so we will see if it is visible later. Okay, let's talk in this last 15 minutes about the sustainability of data analytics and artificial intelligence. So we can use artificial intelligence also to generate sustainability. And the sustainability is a concept that is very inside, I would say, the human beings. Just think that two very different populations, very distant in time and in space, like the Iroquois from 1,000 years ago, and the Mororo Fulani, which are still a present population in Chad, in Africa. They have the same concept. They believe that we have to care about the impacts of our actions for the next 7 generations. More or less 7 generations are 200 years. So you can imagine how difficult it is to predict the impact or simulate the impact of our actions in 200 years' time. So I believe, especially nowadays, where our world is very complex, is very interconnected, and economies are very complex, let's say we need a data-driven approach, artificial intelligence tools in order to predict the impact of our actions. There is somebody that made a study and published this study on Nature Communications, how the artificial intelligence can create positive impacts or negative impacts on each of the sustainable development goals of the United Nations. Luckily, we can say and we can see that there are more positive impacts than negative ones. In the radar chart, you see on the left, we see the positive impacts, while on the right part, we see the negative impacts. Happy to see that, for instance, we can create and generate positive impacts using artificial intelligence, for instance, in reducing poverty, in reducing inequalities, in creating more sustainable cities, and in especially having a more clean and affordable energies, which are the objectives more touched by positive impacts using artificial intelligence. I hope that there is a video now that talks about a project that we did with SAS. I hope it's visible and also the sound can be audible. Please tell me if it is not like this.
My name is Lisa. I like living in Namibia because Namibia is beautiful. There are all the animals and plants. There are some people who want to kill animals like the lions and cheetahs. I like to teach them. There are not many left.
"100 years ago, we had somewhere in the region of 100,000 cheetahs in the world. Today, the number stands at just 7,100. And these are flagship species. As they disappear, they represent the disappearance of a huge chunk of the biodiversity that goes with them.
Biodiversity is what supports all the things that we need as humans, and yet it's disappearing much faster than any of us realize. One way that we've started approaching monitoring of endangered species is to look at their footprints. Yeah, look, I think we've got something here. That's cheetah, definitely. We've learned from working with indigenous trackers over many years in Africa that we can use footprints to identify species, age class, individuals, and sex. Do you have any thoughts about whether it's male or female? What do you think?
It's not so big. Right. It means that it's a female. Right.
So it's interesting that our algorithm is picking up some of the things that you're doing in your mind, right?
We came up with a mathematical model, and this is where SAS comes in, starting with importing images, and then we use those to derive the metrics, which then allows us to do the analysis.
We're depending on data and analytics to protect these animals, and now we're beginning crowdsourcing from around the world. So ordinary people who wouldn't necessarily be able to dart a rhino, but they can take an image of a footprint. We've got data coming in from everywhere, too many data for us to manage traditionally, and that's really where artificial intelligence comes in.
The big question is, can artificial intelligence do what indigenous trackers can do?
When we see an indigenous tracker look at a footprint, we realize there's a huge gulf between that and what machine intelligence is currently able to do. It's just millions of years of evolution that have allowed us to be able to identify these patterns. And it's a big challenge in image processing.
You know, identifying footprints was a very tedious process to be able to sort and classify them. So to be able to take that one task that's a repetitive task and automate it seemed like a natural fit for an AI solution. And it required a lot of expertise and insight from Zoe and Sky to help us train the computer to categorize the footprints the same way a human tracker would.
So essentially what the heat map is attempting to do is to pick up those edges.
This heat map is kind of visualizing what our deep learning model is looking at and just thinking that part of images is important to distinguish if it's a cheetah print or a tiger print.
The red section is a bit that's actually standing out as representing the footprint.
Yeah, like because we are predicting the footprint. So we overlay.
Getting 100% accuracy in this project is very challenging, but we'll get there. For this one, we need more data, and we need more scientists to contribute to this project so that we can really solve this problem.
I'm excited about the potential of artificial intelligence because I think that one of the hugest challenges we face is how to protect our planet, our ecosystem. And the way that we can solve it is by bringing in data from all parts of the world in a hugely magnified scale, much, much more than we have at the present. These data have incredible value in conservation. If we don't know where the animals are and how many there are, we can't begin to do things like working out where animals should be protected, looking at animal-human conflict. These are all global conservation questions that conservation biologists all over the world need answers to.
I think we exist in a world today trying to use artificial intelligence. And our challenge is how to harness this in order to answer some of the most fundamental questions and create an environment where there's room for us and all the rest of the species in this world.
Okay, this is a project we did under a program, a worldwide program we have at SAS, which is called Data for Good. So using data and analytics and artificial intelligence in order to create more sustainability in the world. I like this project because in different parts of the projects, we see the cooperation between the humans and the machine, the algorithms. For instance, in the sourcing of data, so local people, you can see they go around the territory in order to take pictures of the footprints, but also there is the cooperation during the training of the algorithms because the knowledge about recognizing a footprint, if it is about a cheetah or a lion or a tiger, and also what sex, what age, and what species in general the animals are, is a knowledge brought from the humans to the algorithms. The same, more or less, happens also in another project we did. It is also a Data for Good initiative. In this case, images come from satellites. But here, again, it's humans that help the algorithms in order to recognize what there is inside the picture. In this case, we use satellite images in order to save the rainforest, and we ask humans that use an app to decide whether they see in the pictures if they see only natural territory or also anthropic activity. So in this case, everything is natural. In this second case, through the app, we could tell to the system that we can see some little human activity, even more in this picture where we see a lot of human activity. So this is the way we help the algorithms in order to recognize if the forest is preserved or if the deforestation is augmenting and where. Then the algorithm can learn, and then they are deployed, and then they run and discover what happens to the rainforest day after day. We don't work only at the level of environmental sustainability, but also about the sustainability of communities. For instance, in this case, we use a lot of data in order to find correlations between the climate change and the statistics about girls going to schools. And we find, especially in some developing countries in Africa, we found important correlations. For instance, in countries where the climate change is having a lot of impacts, girls have to churn from the school, so they have to abandon their studies. And this is bad. So this is a tool which is used by funding institutions to fund studies for girls in those countries, especially where they find that climate change is giving a lot of impacts. In the last case, I'm talking to you about an industrial case. So we are working with quite interesting ecosystem. So we are working with a startup able to collecting data from any kind of production machines at industry level, but also, for instance, at agricultural level, putting this data on the cloud, where with the SaaS technology, we analyze it, we discover anomalies, we understand the performance of those machines. At industry level, at company level, this is important because understanding the performances of the machines is also a way to understand if the production activity is sustainable or not, how much the machines use about energy, for instance, and the impact they have on the environment. The same, if we think about a more wide level, can be done at ecosystem level. So if a bank, a financial institution, for instance, is willing to give this kind of tools, this kind of systems to the ecosystem, for in this case, we can see an agri-food ecosystem where we have also both agricultural production and transformation of food, and also the distribution. Collecting the data from all the machines in the ecosystem, the financial institution can understand a lot about the sustainability, not only of each company, but also of the whole ecosystem. So they can understand, for instance, about the carbon footprint along the supply chain. They can identify if there are inefficiencies in the supply chain so that they can let's say, enhance it. They can also anticipate risks. For instance, if we talk about health risk in food, this is very important. So they can use analytics in order to predict health risk in food. And they can also detect frauds, because in the agri-food chains, there are sometimes frauds. And we believe, and we know that because we are talking with banks, at least in Italy, that this is a business they are moving to. So they are very interested to this kind of use case and this kind of business case. I hope everything is clear. Otherwise, both me and Francesco are happy to answer to your questions.
Thank you, Claudio. Thank you, Francesco.
Thank you very much. Thank you.
Thank you.
Are there any questions, comments? Yeah. Please.
Again, a comment and probably the same comment. Thank you for your presentation. I really like the discussion of the United Nations Sustainable Development Goals and how analytics can contribute to that. But the comment is more or less to the speakers, again, to us in the room, that we make sure that the students we are teaching are implementing sustainable practices in all modules. We try to do that when we develop the new master, but it's a responsibility for all of us to really look hard, have a hard look on how we're preparing the students. Are they thinking ethical and sustainable? Because FinTech, I talk about it in Hanoi when we did the national event, that it's not just about making the financial and profitable results in FinTech, which is often the biggest focus, is are these sustainable? How are they impacting all communities? So I just think it's for all of us here to look at what are we offering for students? Are we equipping them to be the leaders with this mindset? Otherwise we are not succeeding, even if we are making profit with our new FinTech and new students. So it's just a comment for all of us to really look at the modules and do they cover this? Are we helping students develop this attitude? We try to put it in our online curriculum, but that we have that as a mission. I'm sure that all of us, we are working on it, but that we really take this as not just like a nice title or nice side activity that company does a bit of corporate social responsibility sometimes, that it's essential. Is your FinTech helping everyone? Or is it maybe ruining someone's life with the new FinTech solution? So just, I think that's for us as a mission. And I'll have that comment probably for any topic we discuss, but we do need to take it seriously and see what we are offering. Are we preparing the students that are doing better job than we are doing? Because we're not doing a good job, like industry, education, all of us.
Thank you for this comment, and indeed we are bringing this kind of content generally also in university, talking directly to students in classrooms, because we understand that students, especially nowadays, are very sensible to sustainability, and we hope that we can touch somehow their consensus and to provoke new ways of using technology, a better way to use technology in the future.
Yeah, we try to push more and more the concept that data value is no more only on the economic and profit dimension, but also talking about environmental impact and social impact. So please help us to spread these concepts and ideas to all students. Thank you very much for the consideration.
Yeah. Just an affirmation from St. Louis University. When we had the technical evaluation of the M-FinTech program, one of the evaluators was very clear in what he said when he suggested to add corporate social responsibility as well as ethics in the practice of FinTech. He made mention that it has to be pointed out how important it is. That's why we had to move it. We had to make some changes in the way that we arrange the courses. And that was a very important point indeed. So just to affirm what was said earlier. Thank you.
Thanks to you. Thanks to you for this comment.
It's not actually a question, but a comment. And the one that presented by Claudio about machine learning, about prediction, we are actually facing challenges. We are also quite doing good about sustainable development because we are into that track and following the UN SDGs. But the challenge on the FinTech issues about how the students are really adept into the technology. And now as the technology is being developed and using the machine learning, the prediction models, and the training of the algorithms to predict something else, because we have also, I have those kind of researches and projects in which, because my field is in environmental engineering, civil engineering, environmental medicine, something like that. We made various models, trained some algorithms using, like, for example, physical properties of water to predict something like metals and metalloids concentrations. So if we are going to apply that into the fintech world, there is a possibility of security issues which we should look into, because developing models, training algorithms, and predicting something could, sometimes result to security issues. So I think that it's also the thing that we need to incorporate in our program. Okay. That's all.
I didn't get if there is also a question inside your comment, or
it was a comment, just a suggestion to improve.
Yeah.
And good. Yeah.
Thank you, Francesco. Thank you, Claudio. Thank you, Dane. Thank you all for comments and for presenting. Unfortunately, we are a bit late with respect to the scheduled time, so I will kindly ask the next speakers to stay in 15 minutes with their presentation. I immediately pass the floor to Davide Salviani, which is the head of products in BKN 301. Please.
Hello, everybody. This is Davide. Nice meeting you. Nice being here with you. Can you see my screen?
Yeah.
Okay. I'll just try to be very short. We're going to talk about opportunities of fintech in fast-growing markets. Just to give a brief introduction of our company, BKN 301, and we are. Our mission is to work in a world without financial and technological barriers. Why did we come to this kind of mission? Because we are based in San Marino, and San Marino is a very small country within the borders of Italy, but actually we are out of the European community, even if we are in the SEPA area. So we face a lot of problems that other countries outside of Europe, of the US, are facing, being outside of the most common licenses in bankings and so on. So due to the fact that the world of banking and payments is growing in a very fast way, we couldn't, just working in San Marino, address to all the issues the technological, advancement are providing, and also the opportunities. We decide to start a new company, which started just a little bit more than 1 year ago, at the beginning of 2021, to work on payment solutions that might be used in the small ecosystem of San Marino, but that can be exported in the emerging markets. So here in San Marino, we are a fully licensed payments institution and e-money company, but at the same time, the solutions we are building are to be provided in emerging countries outside of Europe and the US. So right now we are working in San Marino. We are offices in Italy, and we are already working in Egypt and in Qatar, where we have our own subsidiary companies, and we already have clients there. We are partners with Visa, MasterCard, PayPal, and Alipay Plus, UnionPay, JCB. So we want to provide a full ecosystem for payments, both issuing and acquiring, in the countries we are working on. And so how do we do that? We are building a full ecosystem of products which are for issuing, so giving the customers payment methods that can be cards or digital wallet, virtual cards, and to be used in a very easy way. But we provide also acquiring solution for the merchants as a multi-acquiring platform. And at the same time, we're working, our main focus is working on cross-border, which is one of the problems that countries outside of Europe and US are facing for payments. So how do we do that? We are actually building a banking as a service system, a platform that manages the accounts, the client database, the cards, and the merchant database. But this account is a layer that allows us to go and be integrated with players that are actually working on each country. As you know, banking and payments regulatory are very different from country to country, and from a compliance point of view, there are many differences. And so there's no way that one solution is good for everybody if you don't understand and you are not compliant to the rules of every different country. For this reason, our platform is completely modular and might be integrated with low-level services of every different countries. And these services goes from the core banking with everything that is related to reports to the central banks and so on, and for KYC and AML, which is a really big problem that should be faced when talking about cross-border payments in general, but in cross-border, this topic is really sensible. And also acquiring and issuing. So let's say the application we provide to our customers are based on our layer of abstraction, and we can provide wallets and acquiring solution, PSPs, and also full integrating banking services. How the markets we are working on really need technological advancements, and they are really growing a lot. But building this platform from scratch, it may cost, and in terms of money and time, a lot to them. So what we are doing is providing banks and financial institutions the possibility of a startup, of starting up with the new technologies in a very short time. And so this is just, brief introduction on the solution we are providing as a wallet, as payment gateway, and as cross-border. I would like to go a little bit deeper in the cross-border theme. We want to give a frictionless ecosystem to our customers around the world. And our goal is to build a global network and to virtually reach every country in the world. How do we do that? We do that integrating. We are basically an integrator, and we are going to integrate every kind of solution that allow us to connect with different countries, with different regulations. What we are doing is we take care of all the technological impacts of these integrations, and but we to provide to the customer a very easy way to integrate our solution with their value of proposal. So just a use case we are facing right now. We are in the GCC area. Talking about cross-border, there's big increase every year, and the payment fees, the transaction fees for cross-border are really high, 6.5% or even more, and the time to take this that this payment might take, depending of the countries, might take from 3 to 14 days, and we are using different technological backgrounds. One of them is the blockchain that allows virtually instantaneous payments and transactions. So talking about a specific use case we are facing is the one of remittances, and we are right now building, working on building a channel between the GCC area in Egypt. We are already partnered in these areas, and to allow the Egyptian workers that live abroad to send money back to their families back in Egypt with lower fees and a very in a very short time. So how remittance works? The person or the business might start the transaction from a web portal, mobile app, or banking branch, and requesting to send funds. We take care with the bank we are integrated with about all AML and checks, and then we push the payment through our APIs. We route the transaction to the receiver, and then the receiving institution will pass the funds into the delivery channel, the preferred delivery channel. We might be a bank account, a debit card, or a wallet, or a cash out location. So what we are providing is a platform that can be integrated on multiple levels and can give our customer multiple opportunities. This is just an example that what we're building in Egypt is a top-up solution for a wallet, and so the beneficiary of the receiver will have a wallet that might be top up from abroad, and the top up might be from some countries, might be through the circuits, so Visa or MasterCard and their solutions for peer-to-peer transfers. And from other countries, it might be from using blockchain solutions. And we are integrating with some blockchains, and at the same time, we are building our own blockchain to do cross-border. And so the customer will be able, the customer intended as a bank will be able to integrate through our APIs, and based on where the transaction starts, we can use one solution or the other solution. While the end user doesn't know the underlying technology used to make the transfer. And this is, you know, what our mission is, which is bringing the technology in the hand of everybody in the world, without the need to understand what the underlying technology is in a very easy way. So our solution is an orchestrator on top of blockchain or circuits network, and our goal is to integrate in a seamless way the blockchain solution in our banking as a service platform. So our customer, bank or financial institution, might directly use our services or might use our white label app that we may customize for them. And so there's very little effort on their side to implement our solution. And that's, you know, one of our goal is to be able to provide instant transactions all over the world with a fraction of the cost that is paid today. And this is what I would like to share with you. And if you have any question, any comment, I'm here. I'd be glad to hear from you.
Thank you, Davide. Comments? Questions?
Oh, no. Okay, sorry.
Just to remind everybody that Davide also supported Trust Project because they also recorded a lesson for us, providing the experience of their company. So thank you very much also for that. Just to remind all.
Okay.
You're welcome.
I leave the floor to Alberto Rastelli and Edoardo Busani, engineering.
Thanks again, Davide.
Thank you. Thank you. Bye-bye.
Okay, we are going to have the last two presentations. I know that we know that it is a long morning, but we decided to stretch all the presentation in order to give you all the afternoon free. Okay.
Easy. Okay. Okay. I think everyone can hear me. Okay. Let's start with our presentation. Good morning. It's a pleasure to be here speaking at this international workshop. My name is Edoardo Busani, and I am a business analyst at Engineering Group. And I'm here today with my colleague Alberto Rasselli, that is the innovation specialist at Engineering. We both work on robo-advisory projects in the wealth management service line, and we are responsible of the delivery of our robo-advisor solution to our client banks. Before speaking about robo-advisor, let me give you a brief introduction of engineering. I think that most of the partners know us as Deus Technology. This is because we started the project as Deus Technology, a small fintech company operating in digital wealth management industry and serving clients with several digital solutions related to the fintech finance area. But during the year of the Trust Project, Deus Technology has been merged in a larger group that is called Engineering, that is the digital transformation company leader in Italy, with offices spread all over the world and operating in the major market sector, in particular digital finance. Today we will share with you some insights coming from our experience in the digital wealth management industry, in particular as concern robo-advisor. I will start sharing with you some theoretical aspects related to the robo-advisor world, and then I will leave the floor to my colleague for the presentation of our main projects in the form of use cases and a little demo of our solution. Speaking about robo-advisor, we can say that robo-advisor are the most disruptive trend in wealth and asset management today. When we use the term robo-advisor, we refers to a technology that let people, investors, in general, I don't know how to say, complete an entire investment process from the beginning to its end, with the monitoring of the investment position autonomously without the intervention of a human advisor, or with a low level of human intervention. Robo-advisors have many advantages. In particular, they meet the needs of new investors generation, in particular because they meet the needs of clients that are more receptive with technology. They want to have the possibility to invest using, for example, application, in particular in a mobile form. They want to have the possibility to monitor with different tools, technological tools, their investment position. They also have low fees, so can be given to clients with low fees because they don't require the human intervention or require a low level of human intervention. And in particular, we all know that human effort is a synonymous of high costs, and reducing the human effort in providing the advisory service is possible to reduce the cost of the service, so that the fees charged on clients for the provision of the investment services. And for this reason, they let also the bank to serve the so-called unserved investors, because the robo-advisor are generally recognized as a technology capable to bridge the so-called investing gap, letting banks to offer advisory services also to people that have low savings to spend in investments, because reducing costs through the robo-advisors, banks can increase the margins also on the low investment amounts. Speaking about classification of robo-advisors, the market generally divide the robo into main models. From an end, we have the B2C model, in which the client have the digital solution is delivered directly to the retail client, that have the possibility to complete autonomously the investment process. And in this model could be foreseen a human advisor support also to guide the client during the process, in managing all the phase of the process. And from the other hand, we have the B2b model, in which, unlike the B2C model, the technological solution is delivered to the advisor, the bank advisor, that uses it to compute, to calculate the investment strategy, to propose to client, to sell to the client in a second phase of the process. In the next slide, we want to share with you some data about the robo-advisor market. In particular, the worldwide market is growing faster. The global robo-advisor AUM means asset under management, and is the main KPI that we use to measure the dimension of the market. Is expected to triple by the end of 2025, about 2.85 trillion. In this slide, we will share with you that the investment globally amounted to less than 4,500 in 2020, and in Europe is a little bit higher. And also the number of investors is growing fast. It is expected to double by the 2025. And then in the last slide, we will present to you that the main type of asset used to provide investment services using robo-advisor are the ETF that are a particular typology or type of investment funds. So thank you all for your attention. I leave the floor to my colleague Alberto.
Perfect. Hi everybody. I have a problem. Okay, I'm going to explain you our two business case. We install our robo solution in many banks. In this case, I am going to explain you the case linked to a small bank, Italian small bank, and the second case is one of top 5 bank in Italy. We divide the robo solution in 3 steps: the onboarding phase, the proposition phase, and the monitoring phase. In the onboarding phase, the client can play with some inputs to see how his strategy could change. In the second phase, there is it's the first actual phase where the client for the first time can see a financial proposition. And the third phase, the client can check his proposition, how it's going during the market phase. This for us is the complete solution. So this small bank is told in his online bank all the solution. So he is selling financial instrument through our robo solution. Here are some numbers linked to the project. So the project lasts 9 months. And the project team was composed by a project manager, 2 business analysts, 2 developers, 2 testers, and an architecture specialist. The revenue model, we base our revenue model on a one-time cost. It covers the software developments, software setups, and the maybe main important phase, the integration with the bank system. A recurring cost for bugs fixing and others changing in settings, and a revenue sharing link with the asset under management. Here we can see some numbers of this solution. And as you can see, the numbers of user is increasing, and in the same time, the asset under management. The asset under management is linked also with the markets up and down, and currently is going so well. The second case is a primary Italian bank. In this case, the banks hasn't yet bought all the solution, but just the first 2 steps, so the onboarding phase and the proposition phase. At the end of the process, the client can call a human advisor to conclude the process. Our aim is to sell all the complete solution to the bank at the end of this year. In this case, the bank, the project lasts 4 months, less than previously, because it's just only 2 phases, and we knows better the process. And the project team was more or less the same of the previous case. In this case, the revenue model is based on one-time cost and a recurring cost without a revenue sharing process. Here we can see some numbers linked to the front-end data, because the banks pays a lot of attention the client data and on the customer experience in his solution, and they want to improve after a deep analysis of front-end data. We are working on some new features. We want to link our robo solution to spending habits of the clients. So we want to customize the financial proposition after the client's analysis of their habits, spending habits. The banks has this data, so it's a problem only linked to the integration with the bank system. And we want compute the current and the prospective saving rate for a better financial proposition. And in this case, we can propose an accumulation plan on annually or monthly basis. What we learn about our experience, then the main target for this type of solution is people who don't want to go to branches and want an easy and cheap investment model. We advise the bank to support robo solution with a human team dedicated to the solution, to improve the acquisition of clients. The banks actually have big advantages compared to totally digital platform, because the cost of acquisition of the new client is really low for the bank. And the most important part for this project is the integration with the bank system. And usually in Italy we have old bank systems, and for us, it's an important part of the project. The most important aspect for the success of the solution is to invest on user experience more than stock picking algorithm. At the moment, the bank prefers a sort of gamification in the user experience and doesn't put attention on stock picking algorithm. For the bank, the bank want to maintain the control on financial instrument proposed by Robo. At the end of presentation, I am going to present you our demo of the solution. Just a quick. Okay, this is our white label solution. So we sell this solution to bank, and after the bank can customize the solution with their customer experience, their new features and so on. And we developed the new features, or we customize the front end. In the first part, we started the demo with the landing page. So in the first page, the bank can see the main features of the solution, of the Robo. You should imagine this solution installed inside the online bank. So the client enters in his online bank and opens the Robo from the online bank. At the middle area of the landing page, the client can play with different risk profile. The risk profile for us is really important because the main information used by Robot to generate a financial proposition. You can see different risk profile. We don't use a technical language in this case because the solution is studied for a retail client without financial knowledges. So the client can see different risk profile linked to life experience, or he can answer to our questionnaires to see his risk profile. At the end of the landing page, the client can play with some different inputs. Here we maybe have a problem with the connection. Okay, because it didn't work. Okay, so he can play with risk profile, initial amount, and time horizon to see how its strategy could perform. After the landing page, the client can see a different, the second step of the solution. Just a moment, maybe the connection isn't so fast. I hope I try with probably we have a problem with the. Okay, it's just only slow. Here the client can see the same inputs with more information. The forecast of the Robo proposition. Robo compute calculate the solution, the financial proposition based on risk profile, initial investment, time horizon, in some cases in goals and others information of client. Here you can see the past trend of the strategy behind advised by Robo and the current composition in terms of asset allocation, and we have different way to show the same information. This is white label, so it's after the bank decide how prefers to implement the solution. The same with future projection and forecasting. After this step, the client can decide to invest, to continue with the process. In this case, for the first time, there is an important integration with the bank system. So in this case, we are integrated with the cash accounts and with the others information of clients, for example, with the investment managed by the bank linked with the client. In this case, we try with this amount, first amount, and we see how the robot try to, a very amount, try to generate a financial proposition. We have the same problem with the connection, but at the end, I hope it's working. Just a few seconds. Okay. In this case, the robot propose investment line. In this case, the demo is configured with a discretionary model. So the bank advice to client for a financial product, and the client imposed to bank the maximum level of risk and maximum level of and the minimum level of performance. In the third phase, we can see the financial instruments chosen by the bankers. Here we can see the past trend of the proposition, and you can see how it can perform in the future. So here the trend isn't so good for the markets, for the current market trend, and but we can change the performance with some configuration tools. The last part. After this part, the client must sign the advisory contract, and he starts to a relationship with the bank. The last part, the client can check his proposition and his financial investment in a dashboard. He can see the two banks' products, and he can see also as well the financial instrument inside the financial products. You can see the past trend and future future forecast. In this step, the client can confer new money or withdraw money, and can accept or refuse rebalancing proposition. We have concluded the presentation and the demo. Thanks for all.
Thank you very much.
Thank you very much. So you have, how many years in this case is set for? I have seen
for the forecast or for the.
I have seen in the diagram was just 3 years, 4 years until 2027. So for the client.
The client can choose
the period.
The period and the time range. That is the limit. The maximum limit of the period is fixed by the bank, but in the range fixed by the bank, the client can choose the number of years of the investment.
Okay. Thank you so much. We have a proposal from Hove. If it is possible, if you agree to postpone the presentation tomorrow morning. I don't know if it's okay for you. Okay, so maybe we're going to have more time for discussion. Ok. Se vuoi concludere? Okay. So, do you have any questions for the presentation, guys? Yeah. Okay.
Yeah. The program, the software is really very interesting. I know that you're using also models, prediction models, and some algorithms. How do you consider the uncertainty Like, for example, the currency, the inflation, and some other factors similar to that. And how, the second, and how is the predicted numbers correlate, or the investor is really receiving that predicted amount, something like that?
The algorithm, so we have an algorithm to compute the forecasting. The forecasting is based on the strategy determined by robo with different financial instruments. The financial instruments is chosen by robo based on risk profile of the client. So we choose financial instrument correlated with market, but under a level of risk. The level of risk is linked to the client needs. And to forecast the time series, we use a statistical model based on distribution, a normal distribution in this case. And we cut the distribution not at, at a level of the statistical model, and we use the time to continue the forecasting in the future. For example, if the strategy computed by robo has a level of return of 3%, past level of return of 3%, and a level of risk of 10% of volatility. Return and volatility are two financial metrics. In this case, we use these inputs to calculate the forecasting in the future. The projection is based on a statistical model. More sophisticated model, more change the forecasting. We use also other financial information like currency, correlation with the market risk, and we use as well the information of client. For example, if the client doesn't want to invest in some specific area, the robot doesn't use that financial instruments. If the client want instrument with liquidity less 1 year, the robot is obliged to choose only instrument under this level, and so on. The algorithm is an important part of the solution, but for our experience, we don't sell to bank the solution for the algorithm. They don't want to know deeply the information linked to the algorithm, but they want a cool customer experience, a cool software, but the most important part is the front end, what the client see. For more deep information about the algorithm, we can share some information with documents.
I know, of course, that is a secret trade. But what I'm trying to say is that because if you make, I am not questioning about your software, but I'm very much interested. If I am the investor, and I want to put in money into that, then of course my end target is to see how much money I should receive after a specific time, like for example. So, but if the investor has a technical background, then he or she would like to know more, and would like to know if I really do have to receive this amount as written on your program, something like that. So that's the thing that I'm asking, because, like for example, in the case in the Philippines right now, the rate of between the peso and the US dollar is really very erratic, and it changes very drastically. So, and I know that if you are doing some models and predictions, and you're trained models and algorithms, you are based into specific data sets with specific, boundary conditions, something like that.
Clear.
That's why I'm
But
asking.
the secret is this for the Italian bank. They show the forecast performance only in the onboarding phase. So at the first level of the software, when the client want to decide which instrument, which proposition wants. After, during the monitoring phase, the banks doesn't show the forecasting. So it's only in the gaming phase. In that case, we had some problem with the audience of the bank, with the regulatory system. We are changing the front end using goals, so the client can choose a specific amount, and the robot, for example, for a car, for a house, and other goals, and the robot try to calculate the proposition. But the forecasting model is very complex, and usually the banks doesn't want that specific features in the dashboard. It's a trick.
It's nice to know that we have the robo-advisor, which will eliminate the human intervention in terms of financial advising. My question now will relate to the former speaker, which is on AI ethics. In the development of the algorithm of your algorithms of your robo-advisory, how did you make sure that there is no bias in the choice of possible investments?
Here, we doesn't use AI algorithm in the robo process in this case, because in Italy the bank doesn't want that the algorithm chooses the financial instruments. They want to maintain the control of the proposition. In this case, we have shown the discretionary model. So the discretionary model is based on the client choose a specific financial product, but it's the bankers, the asset managers in a second phase to choose the financial instruments. Isn't an AI algorithm. Because currently in Italy, the banks don't want to leave an algorithm autonomously to choose the instrument. I think that it could be the future of this platform, actually not in Italy, but in general in Europe. It's very difficult that the banks decided to leave alone the algorithm to do everything. So in this case, the aspect more important of the algorithm is to configure itself with respecting the low control in terms of risk. Not for us is important the financial instruments because at the moment will be an asset manager to choose the specific financial instruments at the end of the process. So we are in maybe not in the first phase, maybe in the second phase. You're welcome.
Okay, partners. I think we can close, we can finish the international workshop today. We are going to have the second part of the workshop with the last presentation of Harvard tomorrow, and tomorrow morning we are going to have a presentation of each university, and we are going to see your activities, the state of art regarding the project, and then we are going to face off some administrative issues, questions regarding strictly the financial. Yes? Okay, I just to the technician to finish the streaming. Otherwise, we're going to be a lot of people in the dinner. Okay, so I would like to thank very much Professor Alessandro Gennaro. It was a pleasure to benefit from your expertise and presentation during the project and during the workshop. So thank you very much for your contribution. And then I have to thank you all the speakers remotely and face-to-face until now. Thank you very much, Jove, to have decided to postpone for the health of our attendees. So tomorrow we'll be very glad and active to listen to your presentation. And so thank you so much. Last but not least, the attendees, it's a pleasure, really. I'll take back the words of this morning. Thank you very much to be here. We are very glad to benefit from your presence. So thank you so much again for your discussion, mutual enrichment, and for being here. Travel, thanks for pandemic that has finished, or more or less it's quite now embedded in our normal lives. Okay, thank you so much, and yes, see you tomorrow. I leave the floor to the practical issues. Okay.